learners, welcome to our session today. I am your instructor, CPA Aringo Frederick. In today's class, it is a continuation of what we started earlier on. Recall, in our previous class, we had introduced the concept of dissolution. We had looked at some of the main journal entries that we must always have anytime we are handling the concept of dissolution of partnership. So in our today's class, I want us to handle an illustration question. This illustration question is a very basic illustration question which will give us an understanding on how to deal with realization account, on how to account for capital account, and also maybe talk about the bank account. So the illustration that you're going to handle, I'm going to share it on our screen so that at least by the end of this class, we should be having great knowledge when it comes to dissolution of partnership. So basically this is our question. This is our question here. Believing that is very much visible. So basically this is what you're told. That Brayo and Kevo, I know majority of the people normally tend to relate Brayo and Kevo with some certain characters, right? But these Brayo and Kevo for us are good. So you're told that Brayo and Kevo were in a partnership sharing profit and losses in the ratio of 3:2 respectively. Their statement of financial position as of 31st December 2021 was as follows. So I'm given our data there. Then we are told that Brayo and Kevo Enterprises statement of financial position as of 31st December 2021. I'm given these details where I'm having all our assets, and we have our current assets as well as capital and liabilities as well. Then in addition to that, again, these are what you are told in our additional information. Basically these are what you're told. That on 1st January 2022, the partners decided to dissolve the partnership after serious disagreements, and the following information was provided. Brayo took over the investment of 800,000 and also agreed to pay the loan from KCB. The assets realized the following amounts. That is, whenever we're talking of realization, simply we are looking at if they were disposed, meaning that I'm receiving cash out of disposing these assets. So you're told that the assets realize the following amounts. Stocks, 500,000. Trade receivables, 1850. Fixtures and fittings, 450. Plant and machinery, I'm having 2.5. No 3, we are told that dissolution expenses amounted to 110,000. Creditors were paid an amount less 2.5% discount. And you are told that the loan from Brayo was paid in full. Required here. Part A, we were asked to prepare our realization account. Part B of the question, capital account. And Part C, I'm told to prepare our bank account. So my good students, given such a question, of course the first thing that you must always tend to do, as Mwalimu always tend to say, we should do what? We should smile, right? And why are we smiling? We are smiling because the good thing is that we have everything in our fingertips. And that is what we started with in our first session when we introduced the concept of dissolution. We started by looking at the double entries that will always be required to have. So like in this question of ours, this question that you can clearly see here, at this point you are told to prepare our realization account. We are told to prepare our capital account, as well as the aspect to do what with bank account. That is required in that question. So first thing first, my good students, let us prepare our realization account. Let us prepare our realization account. I'm going to squeeze this question here so that we can have it clearly. I'm squeezing the question there. So at this point, preparing our realization account, this is what will be required to do. So I'm going to have my realization account at this point. Remember, realization account is simply an account that you are going to maintain while closing down our operations. So basically, any transaction relating with the close down of our operation, we are going to record it in our realization account. That is a very key concept that, again, we should understand here, that this account is purely maintained to record all transactions on dissolution. So therefore, this is what we'll be having. I'm going to have my realization account here. So we are having our realization. We're having our realization account. I believe that is clear. We're having our realization account. And this is how we are going to have our realization account. This is how we can prepare a realization account. So having mentioning that case, of course, I'll be having my data. So number one entry that you're supposed to do, of course, is to write off all the assets on their book values. So writing off the assets in their book values, what you need to do, my good student, first of all, is to debit our realization account and we credit the individual assets account. That will be our first entry. If you can recall the journal entries that we had looked at earlier on. So in our question there, let us write off all the assets by starting with the plant and machinery. I'm having plant and machinery, plant and machinery, plant and machinery. I'm having plant and machinery. So plant and machinery, in that case, I was given 2.8. So I was given 2.8. So therefore, I'm having 2.8. 2.8. Kindly, I want you guys to ignore the thousands on top there. So in this case, I'm having 2.8. So I'm having 2.8. That is for plant and machinery. 2.8. Believing that is very visible. Believing that my handwriting is visible. Then number two, we're having fixtures and fittings. So fixtures and fittings. Fixtures and fittings. Remember, we are closing down this account completely. I'm having 400,000. 400,000. We do have investments. Investments here. I'm having a figure of 1 million. If you can clearly see there, I'm having 1 million. Then talk of our current assets. We have inventory, 600,000. I'm having inventory. We do have inventory of 600,000. Then I'm having trade receivables. Trade receivables. Trade receivables. At this point, I'm having a figure of 1.9. That is, of course, after deducting the provision for doubtful debts. So that is our first step. We are writing off all our assets by debiting our realization account and crediting our respective assets account. I know once a person might be tempted to ask Mwalimu, why aren't you opening the individual assets account? In this case, so long as you know the double entry, my good student, yes, you're allowed to open. But don't you think you'd be wasting a lot of time opening this individual assets account? As much as it is very important, but for the purpose of our exams and for the purpose of time, so long as you know that you're supposed to credit this individual assets account, just debit your realization account. Just debit your realization account. Now, after we are done with that case, the next step would be what? My good students, I want you to follow these steps as possible as we can. So the next step that will be required to do is to record the values on realization. So in this case, you are disposing of these assets. So recording the amount on realization, we are going to debit our bank account because that is where the cash will go, and we credit our realization account. So let us go to this note and see what did we realize on disposing our assets. So I want us all to go to note number. I want us all to go to note number 2. Kindly confirm in note number 2, believing that you can be able to see that. Note number 2, these are what you are told, that the assets realize the following amounts. That is stocks of 500,000, trade receivables 1850. So whatever account that you're going to debit there, I'll be debiting my bank account and you credit our realization account. So therefore, I'm going to have our stocks. So in this case, I'm having our stocks. Basically, at the back of your mind, you know very well that I'm debiting our bank account, right? Which in this case I was given stocks realized 500,000. So I'll be having my 500,000 at that point. I'll be having our trade receivables, trade receivables. I'll be having the amount that we realized on trade receivables amounted to 1850. Talk about fixtures and fittings. Fixtures and fittings. I'll be having a figure of 450,000. Another item here, I'm having plant and machinery. I'm having a figure of 2.5. So basically in that case, my good students, whatever that we've done there, we've kind of, all these amounts that you are seeing here, the respective account to be debited will be bank account. So when we will open our bank account, you'll clearly see that you are going to debit these amounts that the assets that we sold. Because whenever you're talking of realization, it means that these are the amounts that these assets will realize when they are disposed or after we have disposed them. Now, so we are done with the first two entries. The second entry, my good student, is for us to consider if at all we had any dissolution expenses that you're supposed to pay. And in this case, go to note number 3. Note number 3, we are told that dissolution expenses amounted to 110,000. In the event that I'm having dissolution expenses and they are paid by the firm, if at all these dissolution expenses are paid by the firm, my good students, we are supposed to debit our realization account and we credit where this amount is coming from. And of course, we'll be talking of bank account. So with the dissolution expense, and this dissolution expense is being paid by the firm, what you need to do, you debit your realization account and you credit your bank account. The big question will be, what if these amounts, these expenses are being paid by the partners? They are being borne by the partners. In the event that we realize that these dissolution expenses are paid by the partners, these will be our double entry. We are going to debit our realization account, then we credit the respective account for the partner, a respective capital account for the partner who is paying for these dissolution expenses. In the event that things are silent, we are going always to assume that it is the firm which is paying for these dissolution expenses. And therefore, if the firm is paying for these dissolution expenses, we debit our realization account and we credit our bank account. And that is what you are going to do here. So I'm going to have our dissolution expenses which were paid. So dissolution expenses paid I'm having. So I'm having dissolution expenses paid. Dissolution expenses paid amounted to 110,000. That is the dissolution expenses that you are paying amounted to 110,000, as you can clearly see it on that point. Then, in addition to that, we go to note number 4. Note 4, these are what you are told, that creditors were paid. Creditors were paid an amount less 2.5% discount. 2% discount, 2.5% discount. So my good students, at any given point, whenever we are talking of discounts that we are receiving, and in this case, remember, we are wounding up our business. In the event that we are talking of discounts that we are receiving, kindly always have this at the back of your mind. We are supposed to debit our creditors account with this discount that we are receiving, and we credit our realization account with the discount amount that we are having. I repeat again this statement. With discounts on dissolution of a firm, discounts received by creditors on dissolution of a partnership business, we are supposed to credit our creditors account, or rather supposed to credit our realization account with the discount that you are getting, and we debit our creditors account with the same discount. So here in this question of ours, you are told that we are receiving discounts of 2.5%. So creditors are giving us a discount of 2.5%. The big question will be, what were the amounts of our creditors here? The amounts of our creditors, if we can check in our liabilities, below there I'm having current liabilities, and creditors you are given how much. Creditors, you can clearly see I was given a figure of 3.8. So therefore it will be upon us to determine the discount on that 3.8. So it as if I'm talking of 3.8, my good students, 3.8, we multiply by the 2.5%. That should give us a figure of how much. Mwalimu will take his calculator. I'm having 0.25 times 3.8. In this case, I'm getting a figure of 95,000. So therefore, this is a discount that you are receiving. With this discount, I'm going to debit our creditors account, and we credit our realization account. So therefore, I'll be having here discount received, knowing very well that we are going to debit our creditors account. So I'm having here 95,000. So that is what you're going to record in our realization account, being 95,000. Once we have that case, my good student, the next step will be what? The next step, again, we consider any other element that will affect us. Like, we ask ourselves, are there any assets that were taken over by the partner? Were there any assets that were taken over by the partners? In the event that you are dissolving a partnership, probably one partner might decide, like, I'm going to take this motor vehicle. I'm going to take this furniture. So these are assets that are taken over by the partners. Whenever I'm having assets taken over by the partners, my good students, we are supposed to recall that straight away I'm going to have accounts that are going to be affected, which in this case, the accounts to be affected will be, that is with the aspect of with assets taken over by the partners at agreed values. We are going to debit our partner's capital account, and we credit our realization account. Kindly mark that clearly. With assets taken over by the partners with the agreed values, we are going to debit our capital account, and we credit our realization account. So in our question, did you have any assets that were taken over by the partners? That's a question that we should ask ourselves. And in that case, I can clearly see, if you go to note number 1, was it number 1 or, yeah, note 1? We are told that Brayo took over the investments at 800,000 and also agreed to pay the loan from KCB. So I'm having Brayo agreed to take over this asset investment. So therefore, the account to be affected will be the capital account of Brayo and our realization account. So therefore, I'm going to have here our capital account. This is investment assets taken over. So we took over this investment. So I know very well this investment that was taken over, account to be affected will be my capital account. Therefore, we took over this at an agreed value of how much? At an agreed value of 800,000. At an agreed value of 800,000. At an agreed value of 800,000. So that is what we'll be having at an agreed value of 800,000. Now, once we have that in mind, my good students, once we have that in mind, the next question that we should ask ourselves is, what will be the balancing figure in our realization account? Because if you can recall, the double entries that we had talked about, which are available in this question, we have considered all the double entries. And kindly, you can check the first video that we did on introducing dissolution, where we had some journal entries. They'll come in very handy anytime you're handling any question for dissolution. So at this point, we need to determine our balancing figure of this account of ours and see what we'll be having. And this is what I want you guys to grasp and master very correctly. Whenever you are preparing your realization account, in the event that my debit side is more than the credit side, that is to say, I'll be having what? I'll be having a loss. Kindly understand that case. We are saying, and it's also part of our double entry that we gave in our journal entries, in the event that my debit side is more than the credit side, that is to say, my balancing figure will be on the credit side. And that indicates that we had a loss on dissolution. We had a loss on dissolution. In the event that our credit side is more than the debit side, that will indicate that I'm having a profit on dissolution, because my balancing figure will be on the debit side. And I'd explain the reasons, the whys, in our first video that we introduced this concept of ours. So once we have that case, my good students, let us determine where will we be having our balancing figure. Will it be on the debit side, or will it be on the credit side? Will it be on the debit side, or will it be on the credit side? So therefore, these are what you are going to do. These are what you should be having. Let us do that summation and see what I'm having here. We start with the debit side, 2.8 plus 400,000 plus 1 million plus 600 plus 1.9 plus 110. So I'm getting a figure of 6810. So I'll be having somewhere here 6810, 6,810,000. What about on my credit side? My credit side, I'm having the 500 plus 1850 plus 450 here plus 2.5 plus 95 plus 800. I'm having a figure here of 6195. 6195. So that clearly shows that my balancing figure will be on our credit side, and therefore I'll be having loss on dissolution. But remember, any effect or any changes on that must be effected in our capital accounts. So therefore, my good student, this is a procedure that you're supposed to do. These are what you're going to do. These are what you're going to do. I'm having a total of 6195 on the credit side. On the debit, I'm having 6810. Kindly you can confirm with Mwalimu. So therefore, my balancing figure here, these are what we'll take. Our balancing figure, we are going to effect it in our capital account. Capital account for Brayo and Kevo. For Brayo and Kevo. For Brayo and Kevo, our capital account will be effected with the balancing figure. That is the capital account for Brayo and the capital account for Kevo. So that as at the end of the day, it should give us the total that we have determined here, which in this case, clearly we've seen, I'm having a figure of 6810, 6,810,000. Kindly you can confirm your figure so that Mwalimu should not be doing his own things. I'm having here 6810, 6,810,000. That is what you should be having. So what will be our balancing figure? The difference here, we are getting a difference of how much? We are getting a difference of how much here? I'm having a figure of 6810 minus 6195. That should give us how much? That should give us 6810 minus answer. I'm having 615,000. So having the 615,000 being our loss on dissolution, we need to apportion this according to their profit sharing ratio. The big question is, what were we given as our profit sharing ratio in our question? If you can check our question, our profit sharing ratio, what are we told? We are told that Brayo and Kevo are in partnership, sharing profit and losses in the ratio of 3:2 respectively. 3:2 respectively. So out of the 615,000, Brayo will earn how much? Brayo will earn the 615,000 times 3/5, because we are talking of 3/2, right? 3:2. So I'm having Brayo. For Brayo, I'll be having 3/5 times 615,000, which will give us a figure of how much, my good students? I'm having 3/5 times 615,000. That should give us a figure of 369. So I'm having a figure of 369,000. Whereas this other person, 2/5, Kevo, 2/5 times 615,000, I'm getting a figure of 246,000. 246,000. So these accounts, or rather these balances, will affect our capital account. They will affect our capital account. So in that case, we are done with the first part, that is preparing our realization account. That is preparing our realization account. That is preparing our realization account, my good students. Now, once we have that in mind, the next step will be upon us to prepare our bank account, and also we will proceed and prepare our capital account at once. So therefore, we have our realization account there. So let us prepare our bank account. Let us prepare our bank account. Let us prepare our bank account plus the capital account at once. So therefore, I'm going to have our capital account here. I'm having the partner's capital account. I'm having the partner's capital account. Partner's capital account. Partner's capital account, which our partner's capital account, of course, we are talking of these two individuals. I'm having Brayo. I'm having Brayo, and we do have Kevo. Brayo and Kevo. We are having, again, on the credit side, I'm having Brayo and Kevo. I know probably who are watching us in Kenya, I know you kind of relate the characters of these two individuals, but you are not saying that these Brayo and Kevo of ours, they do have that character, right? These ours are clean. These ours are clean, right? So having this case, actually you can prepare both of them at once, so that we kind of proceed quickly. So after that, I can also prepare our bank account at once. So I'm having here our bank account, so that we work it out at once. I'm having our bank account here, bank account. So this is what you should be having. Just want us to prepare it at once, bank account. So in our bank account, recall the entities that you're supposed to have. First of all, you need to consider if at all we had any balance brought down. The question is, did you have any balance brought down in this case? Did you have any balance brought down? Yes, I can clearly see in our statement here. Look at this case. We had under bank, look at our current assets. I'm having bank a figure for much? 1150, right? So I'm having bank 1,150,000. So balance brought down, balance brought down, balance brought down. I'm having 1,150,000. Recall, there are assets that we disposed, and in our realization account, all these items, the one that we said will affect our bank account. On realization, we had sold stocks. So I'm having stocks here. This is a realization. That amount is coming from realization. That is stock, 500,000. Then I'm having still on a realization, I'm having 1850. I'm having furniture and fittings, the realization account. I'm having 450,000. 450,000. Then I'm having our plant and machinery realization. I'm having 2.5. I'm having 2.5. So basically, these were the amounts that we received. 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 After that, we consider the next item here, which in that case, we look at any amount that we paid. And in that case, recall, we had what? Dissolution expense, which was in our realization, and we said these partly will affect what? Will affect our, actually not partly, but it will affect our bank account, whereby we debited our realization account. So the next account to be credited will be our bank account. So I'm having dissolution expenses here, which in this case came from what? Realization. Realization. So basically these are dissolution expenses, which in that case I'm having a figure of 110,000. 110,000. So in that case, I believe we are done with almost every item that was affected here in terms of whatever item that affected our bank account. Now, after that, we proceed to the next step. Let us go to our additional information and identify if at all we had payments which were done. So in our additional information here, what did we have, my good students? In our additional information here, we can clearly see that I'm having, first of all, Brayo took over the investment of 800 and also agreed to pay a loan that will affect our capital account. Realization, we've seen dissolution expenses, we've considered I'm having. Creditors were paid an amount less 2.5%. And we had already computed our discount. So how much then will we pay our creditors? The creditors balances was 3.8. If you can check there in our liabilities, below there I'm having 3.8 for creditors. I believe that all of us were able to see that. So I'm having 3.8. I'll have the 3.8 at that point. Now, 3.8, that is what you are supposed to pay our creditors. But they gave us a discount. Remember the discount that we had computed here? 95,000. So I'm going to deduct that 95,000. So that is to say, I'll be having a figure of how much here? I'll be having 3.8 minus 95. That should give me 3705. So whatever that I'm going to pay our creditors, I'll be having 3705. So therefore, I'm having our creditors here. We're having our creditors here, which in this case, I'm having 3,705,000. 3,705,000. Then the next step will be what? The next step, my good students, let us identify if at all we had the loan from partners. This is the order of payment, which we'll be looking at it when we'll be handling the aspect of our piecemeal dissolution. So therefore, in this case, I'm talking of how much? Loan for the partner. Did we clear that loan? Yes, we did. Look at note 5. Look at note 5. Note 5, you're told that the loan from Brayo was paid in full. The loan from Brayo was paid in full. And how much did Brayo loan us? Brayo loaned us a figure of loan from Brayo, that is a Romeo, that is a loan from Brayo. I'm having a figure of 1.5. So therefore, at this point, I'm having a loan from Brayo. We paid, so I'm having this a loan account. This is Brayo. Loan from Brayo. We paid 1.5. Remember, at this point, my good students, what we should have in mind is that any time that a partner is giving this loan to the partnership business, is giving this loan to the partnership business out of his private account, not business account. And therefore, this transaction will not affect our capital account, but instead, it is going to be taken as any other lender who is lending the business. And therefore, it won't affect our capital account. It will just be taken like any other normal liability account. And that's why we are going to debit the respective loan account and we credit where this cash is coming from. So the cash was coming from our bank and I'm having the 1.5 there. Now, once you are done with that part, remember you're not done. And again, we won't expect you to have balance carried down in your bank account, simply because we are closing our businesses. Therefore, these accounts should be self-balancing. The bank account should be self-balancing, whereby our entry should be equal and opposite to each other on capital and bank account, which we are going to look at right now. So we are done with that bit. We are going to clear our bank account. Let us proceed to our capital account and consider balance brought down. Remember, balance brought down can either be on the debit side or on the credit side. So it can either be on the side. So what are we given? But many a times we'll always expect it to be on the credit side, of course. So in this case, I'm having look at our capital and liabilities. Capital reserve, Brayo, I'm having 1 million. Kevo, I'm having 800,000. So my balances brought down, I'm having 1 million and 800,000 respectively. So Brayo is 1 million. Kevo is 800,000. Consider any other item that will affect us. Consider any other item that will affect us. So in our capital account also, we had a component in our realization, right? Remember when we said with the assets taken over by the partner, we are going to debit of course our capital account, and you credit our realization account. And here we had an amount which we also given in note 1, which Brayo took. Brayo, in this case, he had an investment which he took over of 800,000. So therefore, I'm going to have here realization. We had credited our realization, therefore we need to debit our capital account, which is 800,000. Kevo did not take over any form of asset. Kevo did not take any asset. Once you're done with that case, my good students, again we proceed and identify items that affected us also on realization. Recall this capital account here. We say that these balancing figures, you're going to take them in our capital account. So therefore, I'm also having here realization. Basically, these were the balances that closed down our realization. Brayo had 369,000. Brayo had 369. Whereas I'm having Kevo had 246,000. Kevo had 246,000. So I'm recording these transactions from our realization account. Is there any other account in our realization that affected us? So we've considered that case, we've considered that. Then again, on any dissolution expense that will be paid, of course, by the partner. In that case, there are no dissolution expense, but liability. Any liability that will be paid by the partners, my good student, if you can recall, the double entry we said, we are going to debit the respective liability account and we credit our capital account. In this note, I clearly recall we are given in note 1. Look at note 1, where we are told that Brayo took over the investment of 800,000 and also agreed to pay the loan from KCB. The loan from KCB amounted to how much? The loan from KCB in our non-current assets, loan from KCB, I'm having a figure of 1 million. So in this case, that is to say, Brayo paid 1 million. Therefore, we debited our liability account, which is the loan account, and therefore we are going to credit our capital account under Brayo column. So loan account, this is loan from KCB. 1 million. Brayo decided to pay for that loan. Brayo decided to pay for that loan. Brayo decided to pay for that loan. So once we have it in that case, identify any other item that will affect us. identify any other item that will affect us, my good students. At that point, we do have another item. Do you have any other item? We just check in our statement of financial position and notes any item that we've left out. We've considered note 1, note 2, note 3, note 4, note 5. We have considered all that. Come to our statement of financial position. We've considered all the assets. We've considered capital. I'm having accumulated profit, which you need to consider because loan from, this is not Romeo but Brayo, loan from Brayo, loan from KCB and creditors, we've also considered that. So the missing item, or rather item that we've not considered, is this loss. Profits, accumulated profits amounted to 250,000. Amounted to 250,000. And remember, that is a loss. That is a loss. So with that loss, we need to share that loss to our partners according to their profit sharing ratio. So in this case, I'm having the loss to be shared, loss, which in this case, this is equity, of course, to be shared, equity to be shared. That is a loss of 250,000. We share that according to our profit sharing ratio. So our profit sharing ratio was 3:2, right? 3:2. So therefore, Brayo will be having 3/5 times 250,000, which in that case would give us 150,000. Whereas Kevo, 2/5 times 250,000, that should give us 100,000, right? 100,000. Now, whatever that you say that, this account basically should be balanced with the bank account because we don't have any balances carried down. So, to balance our capital account, we can either pay off our partners, or the partners should be the persons who are going to pay the firm, depending with who owes who. In the event that our partners are owing the business, that is to say, I'll be having the balancing figure here on the debit, or rather on the credit side. That is to say, these individuals will have to pay what? Will have to pay the firm. But in the event that it is a firm which is supposed to pay these partners, that is to say, I'll be having our balancing figure on the debit side. And therefore, having the balancing figure on the debit side, that is to say, it is a partnership business which was supposed to pay the capital to these partners. So let us see where we'll be having that balancing figure. In this case, I can clearly see this is 2 million, this is 800. So actually, our credit side is more. So therefore, this is what we should be having. Our credit side is more. Our credit side is more, and therefore, we should be having, this should give us 2 million, right? This should give us 2 million, and this should give us what? 800,000. So what will be our balancing figure? The balancing figure, that is to say, it is the business which will be paying our partners. So I'm having our bank. So that is to say, we are going to debit our capital account and we credit our bank account. With how much, my good students? Like for Brayo, I'll be having a figure of how much? I'm having 2 million minus 800,000 minus 369,000 minus 150,000. So I'll be having a figure of 681. So Brayo will be paid by the business a figure of 681,000. What about Kevo? I'll be having 800,000 minus 246,000 minus 100,000. That is to say, Kevo will be paid a figure of 454,000. Kevo will be paid a figure of 454,000. And that is what you are going to effect it in our bank account here. I'm going to have, of course, our capital account. Capital account. I'm having Kevo. I'm having Brayo and Kevo. I'm having Brayo and Kevo. What will we be having? I'm having 681,000 here. 681,000 and 454,000. 454,000. this account should be self-balancing. In the event that it's not self-balancing, that is to say we've messed somewhere where we'll be required to correct. So therefore, let us see what we'll be having. 1150, 1,150 plus 500 plus 1850 plus 450 plus 2.5. In this case, Mwalimu is getting a figure of 6,450,000. 6,450,000. What about on the credit side? On the credit side, I'm having here a figure of 110 plus 3705 plus 1.5 plus 681 plus 454. I'm getting 6,450,000. So that is to say our bank account is a self-balancing account. In that case, these partners are free to dissolve their partnership business. Mark this, that your bank account should be a self-balancing account, which you can clearly see that my balancing figure is exactly opposite to each other when you compare with our capital account, And basically, that is what we were required to do in this question. This was a very simple question, but again, it will give us a foundation, a very good foundation as we proceed to the piecemeal dissolution. So in this case, my good students, in our next class, I'll want us to meet and talk about piecemeal dissolution. Because remember, whenever we're talking of dissolution, it's not a one-day affair. It will take period before we pay all our liabilities, before we pay all our creditors and all aspect of our bank loan, suppose if we do have. It also takes time for us to dispose of our assets, for us to get the amount to pay for these liabilities, for us to get the amount to pay for these expenses. So it is not a one-day affair. And therefore, that is where the concept of piecemeal dissolution will come in. So I want you guys to meet me in the next session where we are going to analyze in the event whereby the partnership business is being dissolved over a given period of time. To that point, guys, thank you so much, and let us meet in the next session. Thank you.